Hey guys, welcome to Make Money Count. It's more exciting news from the Bank of Canada today. We got another 25 basis point drop. So your prime rate, I mean if you have a variable, but the prime rate now is 5.2%. It's very exciting stuff. The how and why of it, we're going to find out today.
Is anyone still kicking around with prime -1?
No. We can get it. We can figure it out, yeah.
On the insured stuff? Or
Yeah, insured, insurable.
And what about uninsured?
So we can get prime minus 85, I think.
Great.
On uninsured, yeah. So there's some good stuff kicking around.
But most of the lenders are tightening
Cutting, yeah. Even Scotiabank, I got a line of credit commitment today. It was prime plus 70. It's usually prime plus 50 for a line of credit.
Oh, line of credit.
It's usually prime plus 50. I mean, we can get prime, but prime plus 70. So they're even changing their line of credit rates.
Listen, prime rate is going to drop. We've been saying it for a while. It's continuing to drop. We just saw another 25 basis points. Next meeting is in March. We're going to see another 25 basis points. This is kind of void of there being any tariffs, like assuming no tariffs come into play. But the one thing we're equally confident in is that the banks, the lenders, are going to tighten the spreads on those variable rate mortgages. So if you're looking to renegotiate your mortgage, the sooner the better. Even if you just want to contemplate the art of the possible on your existing fixed rate mortgage that you still have 2 or 3 years on, what's the penalty to break it? What are the savings associated with switching to a variable rate mortgage? Think about those numbers. Let's get those numbers in front of you so you can start making that decision, because there's a lot of people walking around with like 5 to 6% fixed rate mortgages that they took in order to protect themselves from rising interest rates that are now locked into those rates. Will have penalties to break those mortgages, but breaking those mortgages will allow them to lock into a low variable rate product, and those variable rate products are going away. Like Justin said, the prime -1s, the prime -80s are turning into prime -50s and prime -60s, and we expect that compression will continue. So it's a really important thing right now. A lot of people their mortgages are just up for renewal, so they're very fortunate. Mm-hmm. And the banks are being very competitive right now, which means all of the lenders are being very competitive right now. But it's for sure something you got to think about.
All day, when I speak to clients that are coming up to renewal, we contact you long before your renewal date, and the conversation is, rates are going to drop. I want to see what happens. I might be coming up for renewal in August. So I kind of want to wait to see what happens. There's a couple Bank of Canada announcements, but that's going to be detrimental to you. You know what I mean? Because the more that comes off the prime rate, if you're looking for a variable, the less of a discount you're going to get.
Yeah.
So
let's talk about the Bank of Canada. Did you read anything about it yet?
Kind of.
Yeah.
Yeah.
So first off, we can look at what the market thought about it by what bond yields have been doing for the last 2 weeks, right? Like 2 weeks ago, bond yield, the 5-year Government of Canada bond yield was north of 3.2, and now we are at like 2.85, 2.87, depending on when this podcast is delivered to you. So we can see that long-term rates in Canada are dropping. The yields are dropping. Mm-hmm. The U.S. dollar, Canadian dollar relationship hasn't kind of changed much. It's still at 69 cents. Mm-hmm. But the Bank of Canada had a lot to say about tariffs in their policy report. So they gave us 25 basis points. Mm-hmm. I have a quote from Tiff Macklin, like from the policy meeting, which is interesting. I'm going to read it. I mean, I'm sure you could find it, but I'm going to read it for you. Next Bank of Canada meeting is March 12th. I think we're going to see another 25 basis points. Remember, we said this a while ago, right? I mean, overnight rate is now 3%. It was 3.25. Prime rate is now 5.2%. It was 5.45. The prime rate is going to go below 4%. It's going to hit 3.95%, which means we still have 5 more rate drops. Mm-hmm. What I think we're going to start finding out about this rate drop is it's going to have been like a fart in the wind. It's not going to have much of an impact.
In a heavy wind.
Yeah, it's just the the Canadian economy has far more issues on the horizon line to deal with than a 25 basis point rate cut is going to be able to help it with.
Yeah.
Like just we know that labor market is weak and it's going to get weaker, right? We've got this massive inventory of undigested condominiums and more condominiums still coming into the marketplace. And so a ton of supply without the demand. The problem then becomes if you've got all this supply and you don't have the demand, you're going to stop creating more of the thing that you have too much of. And that's going to be another hit towards employment, right?
Right.
In order to create more demand, you need immigration. We've cut immigration. So, and frankly, the numbers for the condos that are in the market right now, especially the new construction stuff, they just don't work, right?
Yeah.
We talked about it. Remember, it's like the condo is like a dividend stock, or like a dividend stock that had a capital gain on the end of it, a capital appreciation story. Well, condos now turned into, stock that you have to kind of keep paying money to hold, reverse dividend. And also with a kind of capital loss story on it because they're dropping in price. So until we can return to a point where at least one of those characteristics of that asset returns, we're not going to see the demand sop up the supply. And as such, we're going to see more supply at the market, fewer buildings start to go up. So another hit towards employment. So employment's already softening. Bank of Canada had some nice things to say in their report. Like inflation's come in line. They're really happy with that. They're seeing homeowners, or they're seeing large purchases start to occur again, which, shows some confidence in the market. But Tiff Macklin, is super worried about tariffs. So let's pull up the poly market chart. So the poly market chart, if you have you seen these poly market charts? Do you remember I said that the poly market chart
was wrong?
It was
You
wrong.
thought it was wrong.
And I was like, forget this thing. Doesn't make any sense anymore.
Yeah.
So I think I changed my mind. I think maybe I was buying into the bluster and bluff of Trump.
Right.
And also I'm Canadian and I have a vested interest in seeing Canada perform well. So I am extra sensitive to the threat of a tariff.
Right. Yeah.
So
I mean, it's a scary thing.
Yeah.
It's a scary thing.
Yeah. But it ended up being no tariff. And then he kicked it to February 1st, right? He kicked it February 1st. But the probability of a February 1st tariff is actually lower than the probability was of a inaugural tariff. Prior.
Yeah.
So we're a couple days out right now, and we're hovering around 8 or 9% probability for the tariff. We were at, if you remember, I think we were at 22, 23% for the inaugural tariff.
Yeah.
So I guess what I'm trying to say is
no tariff.
The bluff is working. Can you imagine from using a cell phone to tweet or truth things out, you can change the direction of an entire country's economy.
I mean, it's the person who's doing it too, right?
Yeah.
Who's is
you saw the Colombia thing?
Yeah. Very funny.
Yeah, I mean, funny. Can you imagine you're one of the lives on that airplane?
Not funny for them.
Yeah,
for
you
sure.
get boarded onto a military aircraft to get sent back to your home country. You're in the air, and the president of the United States finds out that the president of Colombia is not going to allow the planes to land, and he starts tweeting out threats. He's truthing out threats. It's not even tweet anymore. He is sending out threats via truth, and the Colombian president is sending out responses via X. And there's these people on these airplanes.
that are
I don't
getting
know, just something so weird. Something just doesn't sit right with me about the whole thing.
Yeah, no, for sure.
And then as a result, he imposes 25% tariffs on Colombia, and he says that he'll increase them to 50. Just like arbitrary, bully numbers.
He also, I saw this thing this morning where he was talking about, I don't know when this came out, but he was saying that like everybody who's been arrested more than a certain amount of times, he's going to pay another country to take them away from America. It's crazy. It's crazy. The things he's saying.
Wow. Okay, so where I wanted to go with this is the impact that these tariff threats are having on our poor governor of the Bank of Canada.
Yeah.
Poor guy was like, I thought I was just supposed to worry about inflation.
Here's all this other stuff.
So he talks about it in the monetary policy report, and he says specifically what type of policy responses can the Bank of Canada really have to a tariff threat. So he says the higher cost of a long-lasting and broad-based trade conflict would badly hurt economic activity in Canada, obviously. Mm-hmm. At the same time, the higher cost of imported goods would put a direct upward pressure on inflation. So it's like two things happening simultaneously, right? Number one, we need a reciprocal tariff, which is going to increase the cost of things we bring from the United States by 25%. And simultaneously, we're not going to be sending as many things to the United States, so our economy is going to shrink. So the governor of the Bank of Canada is saying, like, well, we really have never had a situation where we had to both stimulate the economy and reduce price growth by increasing interest rates.
Yeah.
And he says, like, we only have one tool. Like, however, with a single instrument, our policy interest rate, we can't lean against weaker output and higher inflation at the same time. This can't be done.
Yeah.
So, like, and remember, like, Tiff Macklin wants to show confidence. He wants us to, like, understand that the Bank of Canada has our backs.
He knows what's going on.
He says basically, like, well, we got inflation under control, so trust us. We're going to have this thing. We're going to figure this thing out. But it doesn't leave you with a whole bunch of confidence.
Yeah.
Like, this is the quote. Do you want to know the confidence-inspiring quote?
Yeah.
Here it is. We have begun assessing the possible consequences of different tariff scenarios, and we present an example in our monetary policy report. We're stepping up our outreach activities across the country to hear directly from those people who are affected by the uncertainty, augmenting our business surveys, to businesses and consumers, so we can better understand how the uncertainty is affecting their decisions. And we'll update you on our analysis. So it seems like
so they're doing a survey.
We don't even have enough information to understand how screwed up things are going to get from the tariffs from the perspective of the Bank of Canada. And that's scary.
100%.
So I guess we're not prepared for tariffs.
No.
Certainly the Bank of Canada is not prepared for tariffs. No. It seems like from the perspective of the federal government, what we are prepared to do is threaten what we're going to do if tariffs come in.
Right. Like taking a page of Trump's book.
Yeah. I just don't know whether, if we've learned anything from what happened to the Colombians through their president's knee-jerk response of we're not letting these people in, and now capitulating to say we'll take them. There's probably a real way to negotiate this. Listen, it's almost like Trump is getting very valuable information. The United States is getting very valuable information in monitoring our response to a tariff threat.
Right.
And that valuable information is going to help them in negotiating with Canada.
Right.
Right. You see things like the Bank of Canada doesn't know how to address it. Mm-hmm. You see things like there's a fracture in the Canadian government, like at the provincial level. You know, the Alberta is willing to continue to send natural oil to the United States and does not want a tariff. Mm-hmm. The rest of the premiers and the prime minister wants to put a tariff on oil in order to impact the United States.
Right. If the United States does put the tariff.
Yeah, everyone else, all the premiers and the federal government are kind of, let's hit them hard if they come in with tariffs. Alberta's not saying that. Mm-hmm. So we're fractured in how our response is, which is no good. The Bank of Canada doesn't really know what to do, which is no good. We don't really have a prime minister or federal government level, which is no good.
We don't have a provincial government now anyways.
Yeah,
either.
and we're kind of constantly pushing out information about how weak we are and how unable we are to deal with the threat, which is also no good. So there's a lot of no goods. And what could turn this thing around for Canada would be if we could come to an agreement, solidify that there weren't going to be tariffs. That could really pivot the whole thing, right? Like if we found out that like, oh, okay, we've come to an agreement, there's going to be no tariffs. Canada goes along for the ride. The United States is going to boom. Canada will go along for the ride.
Right.
There'll be some bumps along the way, like this the AI bump we had yesterday. Did you see that?
No.
So it was like the Chinese have come up with essentially a more efficient way to match the capabilities of the Chat GPT AI.
Okay.
And more efficient because they're doing it with less processing power.
Right.
Like less.
Yeah.
Like they don't get the NVIDIA chips.
Right.
In China. Like there's an embargo on them or whatever.
Yeah.
So they have to accomplish the same. They're actually accomplishing more than what ChatGPT is able to accomplish with much less processing power, with much less powerful chip. As a result, NVIDIA lost like $600 billion of their market capitalization, which is equal to the value of all the Canadian banks, basically.
That's crazy. I mean, NVIDIA was like the Amazon stock.
All of the banks.
Yeah.
The value of the market capitalization of all of the Canadian banks got wiped off of NVIDIA's market cap.
That's crazy.
So like bumps along the road. I mean, like, are we going to see pullback on the S&P? Are we like, sure. But the United States is like all systems go, and it's hard to decouple from that.
Yeah.
If you're Canada, but we're managing to do it right now with this trade tariff.
Yeah, I memean, if Trump is like, if the brotherly love reignites, then I mean, it could only mean positive things. I'm just curious though. I just had a thought. Do you think that if it becomes certain that there are going to be no tariffs, do you think that any do you think that will slow down the Bank of Canada dropping interest rates? Because that will create like some sort of confidence, right?
The reason why I think we're still going to go to like a 395 prime,
which I do too,
which is another 5 drops, right?
Yeah.
5 more drops, is because the economy is in bad shape and it will need stimulative measures from the Bank of Canada.
Right.
I think that based on what that monetary policy kind of I don't want to call it like bumbling. It's just like didn't really have an answer to the tariff question.
It was a circling of the toilet.
Well, it was just he clearly outlined. Like Tiff Macklin said, he's like, listen, like we got interest rates. If we increase interest rates, we slow the economy and we slow inflation. If we decrease interest rates, we speed the economy up, and inflation becomes riskier to deal with.
Right.
He's like, at this point right now, void of a tariff threat, we're going to keep dropping interest rates because the economy sucks. Because unemployment is beginning to be a problem, and it's going to be more of a problem. Like for sure, unemployment is going to be a bigger and bigger problem. Immigration is not coming in to sop up demand on those condos. Immigration is not coming in to prop up our economy. We are going to see our productivity numbers increase because there's going to be fewer people working in those jobs, and the people that are working are going to be more and more productive. We're going to see wage growth compression. Wages are going to start coming down because there is that unemployment. So these are good things for the inflation story. Unfortunately, they're not necessarily very good things for the overall economic or the employment story.
Right.
But it is like a process where we kind of have to cull the herd of the economy. Like we have to like trim the branches that aren't really growing and that are just sucking energy out of it. And there's a bit of pain there. Like I have a like really good buddy of mine, Peter Screedis, who like he'll take these plants and he'll just like cut them down to nothing. And you'll see it and you'll be like, oh my God, there was this like beautiful bougainvillea. And now it's been like
Bougainvillea.
Bougainvillea. It's like a nice plant with like They can be white or pink. Typically, they're like a pinky purple, 4-leafed flower.
Okay.
And it grows like a vine. Anyways, it'll be like this big vine, and he'll cut it down to like this pen. And I'll be like, oh my God, like, why'd you die? Oh, it wasn't growing properly. You could tell it was sick. And then, like, literally, like, a few months later, it's like, turning into a monster again.
Yeah.
So, like, it's kind of like you got to think about that for our economy. Like, we've got to go through a little bit of pain right now.
Right.
In order to mitigate that pain, we got to reduce interest rates. I think we're still going to have a 3.95 prime.
Mm-hmm.
I just think that it's almost more certain if the tariff threat is gone. And then the other thing I would say is you got to remember what the Bank of Canada always tells us is that, and every central bank really, is that they don't really want to respond to one-time inflationary pressure. So if a tariff does come in, it's a one-time inflationary pressure. It pops up inflation for a short period of time, elevates prices to that level, and then it maintains it at that level.
Right.
I'm sure we're going to see the same greedy behavior from some companies where something that shouldn't be impacted by a tariff, but the price goes up by 25%,
Like,
because you can make an excuse.
Like Loblaws?
Yeah, like grocery stores. Yeah.
I have one more question before we go. I don't know if you have anything to say, but I was curious to know, now that we are fairly confident in who's going to be the leader of the Liberal Party, do you think that if Mark Carney gets elected, that he'll have a good chance of that he'll do better than Pierre in terms of?
No, I think it's Pierre's job to lose right now. I think the sooner we can get him in, I think that's another thing about the tariffs, right? I feel like the sooner we can get Pierre Poilievre in, it gives Trump an opportunity to be like, okay, I think I can work with these people. The Trump, that he could be like, maybe there's an opportunity for us to become a little friendlier because the policies on both sides of the border match a little more closely.
Yeah, I don't think if whoever gets in on, like, if he sees a liberal, he'll just, like, it's like he's not gonna be happy.
Yeah. I don't think it fits.
No. Yeah. I think that's it.
Thank
that
you
was
very
great.
much.
I had a good time. Don't subscribe. I had a client call me the other day, and he said, "Don't worry, I'm not liking and I'm not subscribing."
That's
so
great.
the message gets across.
That's great.
All right, guys.
Thank you.